Hello, my name is Madhu Singh, and I'm an attorney at Foundry Law Group. I'm here to talk to you a little bit today about the different legal business entities here in the state of Washington. First off, congrats on thinking about starting your own business. If you've already started, great. I hope you're well on your way. And if you're just getting started, hopefully this video will help you decide what's a good way to get your incorporation done and pick the structure that's best for your business for now and for your long-term growth. I myself am a business owner. I own Foundry Law Group, and myself have had these conversations probably daily at this point about the different types of entity options out there for businesses, as well as helping people think what works best for them and what to be prepared for as they go down this journey of running their business. So at its very basics, in the state of Washington, you need a business license to operate. A business license affords you a certificate from the state of Washington that you are entitled to run your business here. You have authorization to do so, and it also sets you up with a business account with the state of Washington in order to pay your B&O taxes, which, as other parties the department will tell you, is a very important piece of running your business and something to be mindful of as you grow. However, is that enough is usually the question. A business license, sure, you need that, but most often you'll read online or talking with colleagues or with CPAs or other attorneys that it's best to consider a formal legal structure. The way to think about this is the difference between having a formal legal structure and not. So if you don't have a formal legal structure, you're basically saying, I'm an individual, I have a business license, my personal assets are at stake associated with the business. There's really no separation between me as an individual and the business itself. While in some cases that might be okay. As an example, when I started my practice, I was a sole proprietor with just a business license, and that was primarily because I was not quite sure how I wanted to grow the business. I wanted to give myself 1 to 3 months to test out the market to see if I had the idea that it would work. And once that was done, I was going to go ahead and form a legal structure. I didn't at that time have any personal assets to my name. It was pretty low risk, and I didn't want to complicate things with setting up an entity. So fair enough, a lot of business owners start off that way thinking that, but at the end of the day, it's a bit risky for you to set yourself up that way for the long term. A sole proprietor business license is very rarely used by most business owners. To date, I would say only a few contractors who are just doing side projects, or maybe a freelancer who's just primarily doing side projects, really consider being a sole proprietor in the state of Washington. And as a sole proprietor, you simply just have a business license and no other real formal legal structure. If you were to go beyond that, and we want you to go beyond that, we're thinking about building your business for the future and for growth. A is to think of a legal structure that you submit to the Secretary of State of Washington that certifies your articles of incorporation or certificate of incorporation for the purpose of establishing your business in front of the state. So the common forms of a structure are a limited liability company, or an LLC for short, or a corporation. Many of you have probably kind of toyed back and forth with these ideas. What makes the most sense for you is really what we're going to talk about a bit today and what the differences are. Sure, there are other structures in the state of Washington. You can form a partnership. Partnership is simply 2 or more individuals that agree to share in the profits and losses of a business venture. You could actually form a partnership just by working together with someone inadvertently. However, most often there's a partnership agreement, there's there's RCWs that back it, and there's a lot of laws that go with it. It's very rare these days that people simply form a partnership and file for a partnership. Other types of entities that we won't go too much into, but that are out there are limited liability partners, general partners, limited liability partners, and very often you see those structures for more service professionals such as lawyers. You might notice law firms are set up that way, or accounting firms. But for most businesses, those are not really options that are considered these days because of the construct of the limited liability company and the corporation. So we're like, why do you need these different types of entity? Why even have an entity to begin with? It all comes down to your personal assets. The goal is to create some separation where you have an entity that holds your business and your business assets your revenues, your losses, your liabilities, etc., and then your personal life over here. You don't need the two connected to each other. And by creating a structure, you're able to separate out the two. So both a limited liability company and a corporation function to create this shield, as we like to call it, around your personal assets, keeping everything just in the business, and your personal life, in your personal life. So as an owner, you wear many hats. You're the accountant, you're the lawyer, you're everything for your business. But when it comes to your personal life, your home life, you don't need that mixed up with your business, and this is a way to separate out. So if you choose either structure, you file documents with the Secretary of State, an Articles of Incorporation, or a Certificate of Formation. The state of Washington has made it easy. You can do it online. It's roughly $200 to do it online, and within a couple of days you'll have your certificate that you have been formed. You'll be issued a UBI number, and you can apply for a business license, and you can apply for a federal employer identification number. And you can also, depending on which city you're in, you can apply for your respective city licenses. But the first step in all of that is to file with the Secretary of State and get your UBI number. We'll talk a little bit more about the different layers of applications you need a little bit later in this conversation. Okay, so now we've decided that limited liability companies and corporations function similarly, and they both create a shield around your personal assets and keep business stuff in business stuff. So what's really the difference between the two? Why one or the other? Well, a limited liability company is nice, it's flexible, it's easy to set up. Once it's set up, it's pretty low maintenance. You file your renewals each year, and your renewals will be in the month in which you incorporated. So you can calendar it for the rest of your years, the month that you incorporated. Let's say you incorporated in June. Next year in June, you'll get your notification to renew your entity, and so on. And so limited liability companies don't require that you maintain annual meetings. They don't require a whole lot of administrative hassle. It's very commonly used by small business owners, especially one or two owners, to set up a limited liability company. The governing documents are pretty straightforward as well. In addition to the filings, you would have an operating agreement. An operating agreement is an agreement with the company that basically sets out the parameters of you as a business owner or multiple business owners being the owners of the entity, and then different dynamics associated with it that you're going to have. If you have meetings, this is how you might have a meeting. If one were you to leave, this is what it would look like if you left. If you needed to dissolve, this is your process for dissolving, etc. If you don't have an operating agreement, it's not the be all and end all, but it's strongly recommended, especially if you have more than one partner involved in your business. Otherwise, you can look to the RCWs that has a Limited Liability Company Act that'll provide the structure you need for your entity. But very often, if you're even an individual, banks, lenders, even landlords for that matter, will ask to see a copy of your operating agreement, and so it's a part of your corporate governance. It's a must-have, not a must-have, but a strongly should have, as it's not technically required by the state law. The other thing about limited liability companies is they don't, like I said, they don't have a lot of formalities, and that can be both good and bad. So good being it's easy to manage, bad being that it kind of gets you out of habit in keeping track of annual record keeping that's necessary for a company. So we try to encourage, as a pro tip, to kind of have an annual meeting each year when it's time to renew your company. Just make sure all your records and corporate books and everything is in order, and you could check it off your list and go on with your business. LLCs can receive funding if you're looking for funding. LLCs can have multiple partners. LLCs can have different types of partners. So there's a lot of really great flexibility in there. And the other thing about an LLC that can be beneficial for business owners, especially early stage business owners, is the taxation piece. So very often business owners are taxed at their personal level, and it's a flow-through taxation with an LLC. However, as an LLC, you can also tell the IRS that you want to be taxed like an S corporation. And that sounds a little bit confusing, but I'll explain it to you here more. The LLC is a state type entity, and the IRS does not recognize an LLC as a formal entity. Their options are what they call a disregarded entity or a corporation. So LLC kind of falls in this weird term called disregarded entity, in which case you have the option to either be taxed at the individual level or be taxed as an S corporation. It's an active election that you make for your own business. And the best way to decide if it's a good idea for you or not is to talk with your accountant or CPA to get some advice on how your growth is going and if you can save on taxes by being one or the other. So the other type of entity we've been discussing is a corporation. Much like an LLC, it provides the limited liability protection you're looking for, the shield that you're looking for around your personal assets. Corporations do require that you should have an annual meeting, keep your corporate records, establish a board, have board meetings, and have board consents to go around larger actions. It can get kind of cumbersome if you have a lot of activity and a lot of board members and shareholders, but it's nothing wrong with it. It's a good structure and it will work just fine. However, I find that most small businesses prefer not to be a corporation as they don't want to add these added administrative hassles to their everyday business. But if a corporation is for you, that's fine too. It's not that it's unheard of to manage it. It can be done. And the filing fees are roughly the same as an LLC. You can go online, you can file a corporation for roughly $200. So once you establish a corporation, the default is that you're a C corporation. If you want to make an election to be an S corporation, again, this goes back to the IRS tax filing, where you file a form with the IRS to recognize your corporation as an S corporation. And I tell you this because a lot of what small business owners read is LLC versus S corp, when really it's LLC versus corporation. Should you be an S corp? And that's really the discussion you should be having, not comparing the two. But I can understand why you would think one or the other. And again, the best way to decide that is you can go to your lawyer for legal structure advice, establishing these governing documents, helping you with the filings, but to know what the best tax option for you, you really should engage with the CPA to make sure you're set up for the future for your taxes and not get any surprise bill. Because the self-employment tax is real, and it can be high if you're not planning for it, especially in the early stages of your business. That's usually the number one thing that people have shared with me, that they didn't expect the hit from the self-employment tax and therefore navigated options to see if they could save more by setting up an S corporation or what have you. Okay, let's see here. So let's review. We've discussed an LLC and a corporation. We've discussed that you can make an S election with a tax on either entity. We've discussed a bit of the pros and cons of both. One more thing I'd like to add about this corporation structure is that, as I said earlier, it defaults to a C corp, and you may have heard that C corps are subject, unless you file an S corp election, subject to double taxation, where you are taxed at the individual level for money you take out of the organization as well as the corporation itself. And so it can get pretty hefty, and therefore it's really important that you get some advice around that before you move forward with your organization. With the corporation structure, there's articles of incorporation that you file with the Secretary of State, and then there's a governing document called bylaws. And bylaws are a detailed document on how to manage your board, how to have meetings, what you consider a quorum, and how to make decisions. And then in addition to that, if there's more than one shareholder, or even if there's one shareholder, there's a shareholder agreement that outlines the responsibilities of various shareholders. And generally, at the end of the day, it boils down to a buyout agreement among shareholders. It's usually what's in the shareholder agreement. If you are a startup, just as a side note, if you're a startup, you may be considering different states of incorporation. You might be looking at Delaware, which is pretty common, and you might be considering different structures with your corporation in the case of issuing equity, which will involve restricted stock, stock options, etc. That's a discussion for another day. This one is focused primarily on small business and commonly used structures among small businesses, whether it be an LLC or a corporation. So let's say in this example, you're a small business owner, you wanted to start a coffee shop. And so you, in the city of Seattle, you would, first step, go to the Secretary of State, register most likely a limited liability company. In a few days, you would get your UBI number. Then you would apply for your business license with the state of Washington, and because you're in the city of Seattle, you would also need a Seattle business license to operate here. And then it's always recommended to get a federal employer identification number. This is an EIN, commonly used term, attached to your business for you to do your taxes and for you to keep track of your relationship with the IRS. It is tied to the business owner's social security number, but it's better to have an EIN number than to give your social security number on various forms to the general public. So we strongly recommend getting an EIN for this purpose. So these are the main things that you would have to do the filing components, and then one step beyond that would be to get your governing documents in order. For an LLC, you would have an operating agreement. If you're a corporation, you would have bylaws and possibly a shareholder agreement. A few pro tips for you to consider for your organization. Number one is to keep track of the renewals. As I mentioned earlier, that it's usually, you generally renew in the month in which you incorporated. So keep that in mind, calendar it, look out for it, because the state has moved to an online system, so they don't always mail you the reminders. The renewals will be alerted to the address of your registered agent. So registered agent, that's a pretty formal term, but a registered agent is, at the end of the day, the simple main requirement to have a corporation in the state of Washington. And the registered agent is a party. It can be yourself, it can be your lawyer, it can be an authorized person. They also are companies out there that offer registered agent service that is available during business hours to accept service on your behalf. And accepting service means being able to receive legal documents from the state of Washington or from an outside third party who's trying to reach you, would be able to serve this representative, this registered agent, and he would get notified about this. So the registered agent is a pretty important piece, and is generally what is publicly displayed. So not everybody wants to be their individual registered agent. I'll leave it up to you to decide what's best for you, but something to consider. So maintaining your registered agent, whether it be you or a service or your lawyer, keeping up with that, renewing your entity each year. A big one is to set up a separate bank account once you have your business license and filings complete. A separate bank account is really important. You do not want to commingle funds. This is where people hear about crazy terms like piercing the corporate veil, where if you think about it from someone who's trying to sue your organization, they might feel like, okay, well, there's not too much money in the business, but that person has personal assets, and we would like to try to collect from that. Well, some things that they look for is they try to say that you operated your business from a personal lens, not a business lens. And one of the best ways that, not best, one of the most common ways that's shown is through commingling of bank accounts. And if you accidentally do a transaction here or there, or use a personal credit card or a business credit card, the key here is to keep it all organized. So if I use a personal credit card by accident, I will reimburse myself out of the business so that the books stay clean. So if you haven't done this, don't worry, just go back and clean up your books and make sure that your business account stays your business account and your personal account stays your personal account. And if you need to reimburse each other, that you're keeping an appropriate record of how that works. The next is to make sure that you have your governing documents in order and that they're accessible. Before the digital age, this often would be in the form of a notebook, and it would be at your principal place of business. But even Dropbox, Google Drive, whatever you're using, just keep a good place for all your corporate records for when you need to have them available. And then lastly, if you learn nothing from this presentation, but simply this, that when you are operating under the lens of your company, your LLC, your corporation, or if you choose another type of entity beyond these two, when you are operating in that lens, make sure you're wearing that hat. What does that mean? It means that when you are signing a contract, make sure you're signing in your capacity as the owner, the president, the member, the shareholder, the board of directors, whatever your title is in that capacity. Do not sign contracts in your individual name if that contract is tied to your business. This is a thing that is a simple thing to do to maintain your status. It's a simple thing to do to keep you mitigate a lot of risk associated with your business. It's a simple thing to do to keep it all contained within that limited liability shield that you've already created and invested in by setting up a corporation in Washington. So, my name, Madhu Singh, president, or I might say president or owner, either would work, and then my business name is Foundry Law Group, PLLC. The P in PLLC stands for Professional Limited Liability Company, and it's just like an LLC, but they've created a construct for professionals like myself or other dentists or accountants, etc., to use a PLLC for their business to help better identify the type of company that it is. But at the end of the day, the signature is the same. My name, my title, name of company. So you do the same. So my biggest tip that I can offer you in addition to setting up your company and making these huge investments, is to make sure that when you're wearing your business hat, wear your business hat and always sign in its capacity, keep your accounts separate, and keep up with your renewals so that this investment you make today in your business and setting up the structure is there for you when you need it most. Ideally you never need it and you don't get into any liability troubles, no issues, but when you need it most and you need that protection, you want to make sure that these simple things were taken care of so that you can count on it for the future. So thank you for listening. I hope this was helpful. If you have more questions, you can reach out to me, or I believe the contact information will be offered through the department. And I wish you luck in your business, and I hope to run into you someday. Thank you.